So now when it comes to Forex trading, for those who are new, you might have been hearing of Forex, you have, different ideologies, what it could be. You might have an idea that, okay, maybe it's buying and selling of currencies. You have an idea, or maybe you think like maybe it's something too complicated. But Forex trading, foreign exchange, Forex stands for foreign exchange, right? Foreign exchange means you are exchanging one currency for another, right? So if you are changing our francs to dollars, we are exchanging currency, right? So that foreign exchange, which is the full meaning of Forex, is simply the exchanging of one currency for another. So you are selling a currency and buying another, right? That's in simple terms. So in the Forex market, the professional definition of Forex trading is a simultaneous buying of another, right? Simultaneously buying of one currency and selling of another. Now in your evaluation, I'm gonna ask, what is Forex trading? The word simultaneously has to be very important. Now, why is simultaneously in that definition very important? Because it has to do with two currencies, right? Now you hear a normal person saying that, okay, in Forex trading we trade currencies, right? Yes, in Forex trading we trade currencies because you hear of, okay, Forex trading currencies. But a professional trader in Forex trading, we trade currency pairs, not currencies. Why are we trading currency pairs? Because there are two currencies involved, right? Meaning that if there are two currencies involved, it makes it a pair. Are you understanding? So you are changing one currency for another, right? And that is why when we get to the chart, you're going to see that we have currency pairs, maybe GBP USD. You're going to have maybe GBP USD. Now you will never see a day where they'll say, okay, you are trading GBP. Or you never see a day where they say you're trading CHF. Or you never see a day where they say you're trading Euro, right? You always be GBP against something, right? Euro against something, CHF against something. Because simultaneously, you must be exchanging, you must be selling one to buy another, right? So if you are changing, if you are selling your GBP, then you are buying USD. If you are selling your USD, then you are buying GBP. In the case of GBP USD, right? So Forex trading is a simultaneous buying of one currency and selling of another. Now, the foreign exchange market is the largest financial market in the world. So we have different financial markets, right? We have the stock, we have the crypto, we have the other commodities, right? The Forex market is the largest, which is running about 6.6. It's more than 6.6 as we even speak now, because this is old data, right? As we speak now, it is more than $6.6 trillion. So it runs more than $6.6 trillion a day. As we go ahead, I'm going to give you where you can go to the application. You are going to see how much is running the market at a particular time, right? So now this Forex thing is not something that comes from somewhere. It's basically what we do on a daily basis. It's basically what the in community, what different countries do on a daily basis, the transactions that we carry on, right? Right now, as we are speaking, some countries are buying maybe raw materials from other countries. What do? They'll have to change their currency to maybe the currency they're buying from, right? So these exchanges are what makes up the foreign exchange market. Now you're going to discover that when it comes to the liquidity, or let me put it in simple terms, the money that runs in the market, you're going to discover that if you go to the market now, this is almost London session should be closing soon. You're going to discover that the money that is running in the market now is not the same money that is going to be running the market maybe by 2 p.m. Why? Because the market has different sessions in the sense that we have a London session, that's the session where London is open, transactions are going on in London, right? Our Cameroon time is similar to London time. So we are basically on the London session now. Now in the afternoon, when New York is waking up, right? That's New York session opening, right? That New York session opening now, we are going to have more liquidity. Sorry, I'm using high terms. Okay, we are going to have more money, right? We are going to come to the term liquidity, and when I get the definition of liquidity, then we can start using that, right? For now, we say money, basically. So if you look at now, the money in the market now is a little bit low. As New York session gets in, the money in the market is going to increase. Why is the money in the market going to increase? Because USA is rising, right? The morning, they are waking up and session is opening, they start doing transactions. Now, we are all aware of the fact that USA is the world leading power, right? USD, that is their currency. This USD has more strength than most of the currencies, right? So now, USD has more strength and has more liquidity or has more transactions. And that explains why during the New York session, that is when the market goes up to $6.6 trillion or 5 point something trillion dollars, right? Because there are more transactions taking place at that time. Basically, you see that the market is simply exchanging of one currency to another, right? Now, we are not going to be doing it locally where you say you are going to maybe these Muslims in Douala that do exchange, you exchange your francs to dollars. We are not going to be doing that, right? We are not going to be doing over the counter. We are going to be doing it from the help of the brokers, giving us directly to the financial market online, right? So to access the financial market, you need a broker to give you access to the financial market, right? For now, to get the definition, the forex market is simply the simultaneous buying of one currency and selling of another. As you go ahead, you're going to probably understand better. As you go ahead, as you apply, I will look at the different currency pairs, then you're going to understand better, right? Now you should learn how to trade. Let's look at reasons why you should learn how to trade. The advantages of actually trading the financial market. So we are going to look at the first point we have, which is easy access. Easy access. Now, one of the advantages of trading the foreign exchange market is that for us in Africa, there's a reason why we have more forex traders in Africa than stock traders, right? If you go to America, you find out that we have more people that are trading stocks than forex, right? Why? Because it's accessible to them there. But for us in Africa, it took a while. It's not been long that we started accessing the stock market. It's not been long that we have brokers that can give us access to the stock market. But at first, it used to be just Robinhood. Now, if you go to Robinhood, it's an app which you use in trading stock. If you go to Robinhood, if you're in Africa, you're going to see they're going to tell you that the app is not available in your region, right? Means that you cannot have access. But for the foreign exchange market, we have brokers, a lot of brokers that have given us access, right? So the foreign exchange market, one of the advantages is that you can have access to the foreign exchange market anywhere you are. So you can basically trade anywhere you are. If you decide to go to your village today, as long as you have your phone, you have your trading account, you have your internet connection, you are good to trade, right? So it is easy to access. The next point we have on advantage of learning how to trade is high liquidity. Now, what's liquidity? Liquidity is money, right? Liquidity is money. So this high liquidity gives us advantage. The foreign exchange market being the biggest financial market in the world gives us advantage. What is the advantage? If I should open my chart here, just to illustrate, right? If I should open my chart, you're going to see that for us to make money in the market, you either have to buy or sell, right? You have to buy or sell a particular currency pair. Now, just pay attention to this chart. If you pay attention to this chart, you're going to see that you can either buy or sell, right? The chart either is going up or is going down. Now, if you place a trade, you're either placing a trade to buy or to sell, right? If you place a trade for a buy and it does not buy, will you make profit? No, you don't make profit, right? If you put like here, you place a trade for a sell and the market did not sell like this, will you make profit? No. But if you place a sell like this and the market actually sells, that's how you make profit, right? Now, what causes the market to move? Liquidity. The money that is in the market, right? If money is not circulating in the market is not going to move. So that's the advantage of liquidity, right? So liquidity basically helps you, gives you opportunities to either make profit or make losses. Because it's not only about making profits, right? You can either place the trade, it either goes and make profit or it goes against you and make losses. But that liquidity is there to help the market move and thereby giving you opportunities. The next point we have is low transaction costs. Compared to other markets, forex trading usually has low fees and spread, making it more cost effective. Now, for forex trading, aside from maybe you pay to learn how to trade, there's no big fee that they're going to ask you for you to access the market, right? Meaning if you want to create an account now, nobody's going to come and tell you that give me 500,000, let me create an account for you. Or nobody's going to come and tell you that give me 500,000 before I'll give you access to trade the market. What will you do? You simply create your account you deposit the amount you want to deposit, and you start trading, right? The broker that has given you access to the market is going to make a commission, yes. But how costly is the commission? You will barely even notice the commission, which therefore means that the commission is very small, right? And the commission only comes when you place a trade. When you place a trade, they'll call you a very small amount of commission that you will barely notice, right? That's what we call spread. So spread is the commission you pay to the brokers. We are going to see come to that under key concepts in trading. Then we have right, diverse trading options. So aside from trading forex currency pairs, which we have 28 of them, you can also trade crypto. You can also trade commodities. You can also trade stocks, right? Now, when it comes to the foreign exchange market, I'll still go back to my MetaTrader, my trading platform here. If you come to this trading platform, you're going to see that we have different symbols that we can trade. If I come to view and I come to symbols, you're going to see that here we have cryptos, we have forex, we have indices, we have stocks, right? You can choose any of these commodities and you decide to trade. Right here we have Apple, we have other companies. You see Amazon and the rest, Boeing company, all of these are stocks. Then we have the cryptos. You come here, you see BTC, USD, where you see Ethereum, you see Litecoin, and so on and so forth. All of these are cryptos. Then you come down to forex. You're going to see forex currency pairs, right? So it gives you you're able to diversify. Aside from you just learning, once you learn and master how to trade properly, you can diversify and trade any of these other commodities. Some days you might see me trading gold. Gold is not a forex currency pair. Gold is a meta, right? You might see me some days maybe trading BTC. BTC is not a foreign exchange currency pair. That's a crypto, right? So you're able to diversify because with the knowledge you have in forex trading, you can apply it on any of the other markets. So those are some of the advantages we have. Then let's see, we have open 24 hours a day, 5 days a week. As we speak now, the market is open. You come here, you're going to see that the market is moving, right? These numbers are moving. So if these numbers are moving, the market is open. You will come in the evening, you will see this market open. Maybe tomorrow 3 a.m. you see the market open. So the market open 24 hours a day, 5 days a week. That's Mondays to Friday, right? Which gives an opportunity for you. Let's say you are a student and maybe you go to school in the morning and come out maybe at 12 midday. What do? You have the rest of the day to trade, right? Or you're a worker, you are working the whole day. What happens? You have the evening periods or early mornings to trade before you go to work, right? So that's a major advantage. That's the big advantage actually, right? Now, the market is open 24 hours a day, 5 days a week. We go back to the previous advantage, trading other commodities. The foreign exchange market is open 5 days a week, but the crypto market is open 24/7, which therefore means that even if you want to trade over the weekend, let's say the forex market closes on Friday and you want to trade over the weekend, what do? You can still trade crypto, right? So you can still go to your crypto market and you open the crypto market and you are able to trade. Now we go to lesson 3, forex pairs and other commodities traded. Lesson 3 now is about what do we actually trade in the forex market, right? What do we actually trade in the forex market? It's going to be advantageous if you just print out these notes, right? You print out the notes so that you can follow up. Because if you either have these notes or you're either taking down the notes. I think it'd be better if you have the notes already. So, lesson 3, forex pairs and other commodities traded. Now, what do we trade in the forex market, right? Like I said on the definition of forex trading, we don't trade currencies, we trade currency pairs, right? That's two currencies that have come together. And when they come together, what do they give us? They give us a pair, right? So we trade currency pairs. So currencies are traded in pairs, which categorize major, minor, and exotic pairs. Commodities, indices can also be traded. Now we are going to have the different currency pairs, right? So we have 28 currency pairs, and these 28 currency pairs come as a result of. So we have 28 currency pairs. We have 28 currency pairs. Let me just put down this thing. Okay. We have 28 currency pairs. These 28 currency pairs come as a result of the 8 major currencies we have. So we have 8 major currencies, not currency pairs, right? We have 8 major currencies: GBP, GBP, USD, HF, JPY, and the rest. I'm going to give you all the currencies. Or basically, if you can go to the notes, you are going to see all the currencies, right? So we have 8 major currencies. We have the CAD, we have the USD, we have Euro, we have Japanese yen, we have Great British pounds, we have Australian dollars, we have New Zealand dollars, and we have Switzerland francs, right? Those are 8 major currencies. Now, 8 major currencies now, when paired together, meaning they're pairing against each other, right? When paired against each other, will give us 28 currency pairs, right? So these 8 major currencies, when paired together, will give us 28 currency pairs. Are we understanding? Now, these 28 currency pairs are divided into 2 categories. We have the major and the minor. So we have the major currency pairs and the minor currency pairs. That's within these 28 currency pairs, they fall under 2 categories, right? The major and the minor.